At the beginning of the new trading week, the euro and the pound sterling continued losing value. Investors expect the US Fed to tighten its monetary policy after the meeting that is scheduled for January 25, 26. In addition, today, experts at Markit Economics are going to disclose preliminary estimates on business activity in the key sectors of the European and British economies. In our video review, we will focus on these reports and possible changes in the euro and the British pound. The preliminary data on the EUROZONE PMI turned out to be completely different from what analysts had expected. It failed to support the euro, thus the manufacturing PMI advanced to 59 from 58 points, whereas economists had foreseen a drop to 57.1. However, the services PMI slumped to 51.2 points from 53.1, instead of falling to 52.4 points. As the result, a considerable rise in the manufacturing sector failed to prevent the composite PMI from a decline to 52.4 from 53.3. Notably, analysts had forecast a smaller drop to 52.6 points. Thus, the figures are significantly lower than expected. There is no wonder that the euro is gradually losing value. In fact, the forecast also presupposed a decline in the currency. Meanwhile, the UK and expected positive PMI data. But the results were the opposite. The manufacturing PMI was foreseen to decrease to 57 points from 57.9. In fact, the index slid to 56.9 points, almost meeting the forecast. At the same time, the services PMI shrank to 53.3 from 53.6 instead of rising to 54.6 points. As the result, the composite PMI declined to 53.4 from 53.6 instead of climbing to 54 points. That's why the pound sterling continued its depreciation. Nevertheless, just after the opening of the US trade, both currencies may change their trends. The fact is that predictions for the US business activity are absolutely negative. Judging by the situation in the Eurozone and the UK, the figures could be even worse than expected. Now we are going to focus on the trading charts. Once again, the euro-dollar pair dropped from the resistance level of 1.1370, where earlier the upper limit of the range was located. As a result, the volume of short positions jumped, thus increasing the likelihood of a further decline in the euro. Despite the recent drop, the quote is still trading above the local low recorded last week. That's why the downward movement is slackening. If the price fixes below 1.1300, traders will receive a sell signal. In this case, the pair will have every chance to slide to 1.1275 and 1.1230. Meanwhile, short-lived stagnation of the pound-dollar pair near 1.36 boosted bearish interests. Traders got a sell signal just after the price fixation below the local low of 1.3572. As the result, the volume of short positions surged. On the daily chart, we see a gradual change in the market sentiment. The pair has not hit a new local low since January 13. It's quite possible that the pair has started a downward correction. Under the current conditions, the bearish sentiment could become stronger. This may lead to a drop in the pound sterling towards 1.3500 and 1.3400. The alternative scenario will become possible only if the pair remains at the current levels. This, in turn, may result in stagnation within the range of 1.3540 and 1.3580. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.